All right, the euro has had quite a month, right? First, ECB President Mario Draghi cut the central bank's key interest rate to a record low to help lift the region out of its recession. Then, this week, German economic growth gave the euro a lift, pushing the currency to the highest level it's seen in 3 weeks. Today, the G7 finance ministers and central bankers are meeting to discuss Europe's debt crisis and austerity measure. And we have 3 takes on the currency behind it all. Sean Osborne on the fundamentals for you. Bill Maloney on the charts and Larry Shover with your options trade. All right, starting with you, Sean. How should we be thinking about the euro right now?
I think it still looks a bit vulnerable, actually, to the downside, that is. We've been essentially trading in a range over the last month or so, but I think the markets are getting a little bit more optimistic about the outlook for the US here, the potential for the Fed to start tapering its asset purchases moving forward. At the same time, we've been looking, as you mentioned, at the ECB easing rates. So that should give the dollar, I think, quite a significant advantage over the near term here, especially if we see some strong data out of the US next week.
Okay. Bill Maloney, when you look at the charts, do you agree that we could see some additional weakness in the euro?
Well, the shorter-term charts are okay for the euro, but the longer-term charts are actually very negative. So short-term, we've got this uptrend dating back to the 2012 lows. Today, testing the 200-day moving average, but long-term, going back to 2008, basically in this long-term descending triangle pattern. You've got resistance at around 140, support around 120, but within this massive pattern, charts are pretty negative for the euro.
You know, I got to tell you, Sean, you know, we had Jeremy Siegel on the other day, and he's been right on quite a few things, including this market right now. One of the points that he made, he thinks the euro is eventually going to parity with the U.S. dollar. Your take on that?
That's probably a little bit aggressive in terms of where we think things are going, but I wouldn't be at all surprised to see some more weakness here in the medium term. We're looking for the dollar to strengthen across a broad front over the course of the next 12 to 18 months. And the outlook for the euro, I think, does look really quite precarious here.
So if we're at 129 now, where do we go?
We think 125 is only reachable in the next few months. We're targeting 120 at the end of next year. But I think with the way the market's trading at the moment, the focus on the potential for the Fed to start tapering, the European Central Bank easing that we had last week, which we didn't think was going to occur until much later in the year, and the potential actually for more ECB easing eventually with the talk of negative interest rates in the Eurozone. The downside, I think, for the euro is extending potentially below the 120 area to 115, 117 over the next 12 to 18 months, I would say.
117. But if we get 125 in the next few weeks, hey, Larry Shover, I may be heading back to Italy on vacation. 125. What are you doing as far as a trade right here?
Well, right now, it seems like everybody's bearish, and options right now create a great arena right now to express that bearish conviction. You can look at the FXE right now, reference 128.5. You can buy the DEES 120, 126 put spread for $1.53. Now, that gives you 7 months to play with it. FXE has to go down about 3%, 124.47 to break even. Best case scenario, FXE falls down to 120, whereas you make $447. So really, you're risking $153 to make $447 to express that bearish conviction. All signs are pointing that momentum is going down. You have 7 months to play with it.
Wow, wow. I've got everybody in agreement here. Everybody in agreement that things are moving lower. Bill Maloney, what could trip this up?
Well, anything could trip it up. Whatever happens in the Eurozone, our dollar's doing very well. But the key levels, like we talked about before, above this uptrend, 128, below that 120, and worst case scenario, probably 115, which goes back to 2003.
All right, interesting stuff.
Wow.
We're going to leave it there. Thanks so much to the whole gang. Here's the cheat sheet for you. You heard Sean Osborne say the euro is likely to take a hit on austerity growth trade-off. Bill Maloney says the short-term charts are looking okay, but buyer beware. He thinks it's going lower as well. Larry Shover is long-term bearish on the euro, and his trade reflects it. Thanks so much to the whole team. Adam, over to you.